Yeah, good evening. It's Jim from JAGfx.com. It is Thursday, the 22nd of May 2025. This video, we're just going to have a look at some of the dollar cost averaging, or the DCA method I've discussed previously with a slightly different twist. I'm not sure if I've covered this in a video or not. I was too lazy to have a look. But previously, I've been using with the DCA, or dollar cost averaging, previously the Bollinger Bands. So we're going to give the Bollinger Bands a miss, and this is something I've been trading live with recently. So let's have a look at the setup. So what have we got here? Euro CAD daily chart. This is on MT4, just a bit easy to work for me on MT5. All right, let's go through the settings. This yellow dotted line here is just a 20 simple moving average, all right? So nothing changes. Dang. Let's just get the indicators up. Oh, we got here, indicator list. All right, moving average, 20, simple moving average. Nothing changes there. QMP filter on the price chart, 12.26.9, 183. Just my default settings that I use basically for all my QMP filter settings. So that's all good. MACD Platinum, which is this middle indicator here, that doesn't change ever, 12.26.9. Make sure the zero lags are true, so that doesn't change. Now the bottom indicator is a QQE Adv. This is what we're going to base our dollar cost averaging on. So let's just have a look at that. Haven't talked all day, haven't talked to anyone for about 3 days now. My voice is starting to play up already. All right, let's have a look. So instead of 183, the settings are 7.14.1. The colours, I've only got the RSI MA line highlighted. That's the fast line, that's the gold. The slow line, it is no, so I can't see it, I don't need to see it. As long as I can see that first fast line, that's all I need to see. So the colours are 7, 14 and 1. Now the levels, you won't see them. Now you see the 1, the 50 level, which is the middle red line. Because I want different colours, I've just had to add, hang on a sec, I'll show you. These two lines here, because I want them in different colours, I have actually physically added them in using the horizontal line drawing tool. So one's at 65 and one's at 35. So 35, 50, 65. It's pretty simple, pretty straightforward. Now, like any of the trading, generally this sort of works better on the higher time frames. It works better on certain pairs. It's a high risk strategy, don't get me wrong. It's dollar cost averaging, which means you're potentially adding to positions on the same trade on the same side with bigger position sizes. So it can get a little bit ugly, but like I said, I've been trading this on 8-hour charts and daily charts live, and so far so good. So let's have a look at the rules. Pretty straightforward. There's a couple of variations and I'll go through them just to show you the differences. So basically the easiest way to look at it, we'll just go back here a bit so we get, I'll bring up my crosshairs. All right, so the safe way to do this, the safe way is as soon as this yellow line touches or goes through, it's just got to touch the 35 level, in this case here, we take a buy on the QMP dot. So there's your buy there. Now what our target is for the yellow line to go through the 50 level. That's when we take some trade action. So anytime there's a buy signal, as soon as you get that first touch, anytime there's a buy signal below the 50 level, remember we're oversold here. I know some people don't believe in the overbought, oversold things, but who cares? Who cares? That's the terminology I use, terminology that 90% of the trading population's happy with, so I don't give a rat's what other people think. So we've got a buy there. So for example, we go in with 0.1 lot. There's a sell signal there, we ignore that. Then there's a second buy there, we're going with 0.3 lot. So buy, second buy, 0.1, 0.3. Now the sequence I use is 1, 3, 5, 8, 13. I cap it at 13. What that means is my first trade, if it's for one lot, it's one lot. If it's for 0.002 lots, then that's what it is. My second trade will be 3 times that. So if this was one lot, this one will be for 3 lots. If this was for 0.02, this will be 0.06. The next one's 5 times. So 1, 3, 5, 8, 13. And when I say cap it at 13, that means every trade I take is 13 times until I get out of it. So in this case, we take a buy there, take a second buy there, price goes up nicely. All we're doing is watching here. As soon as we get a confirmed break through that, which will be on that candle there, you can start doing some trade management. For me, it'll be like close trade 1, probably close 2/3 of trade 2, put a stop below the SMA 20 or somewhere, and just trail it up and just make much money as you possibly can. So that's a simple, easy method. So we'll just go through a few examples using that. Same applies to the sell side, but I'm trading Forex. So here's one here. It's gone up, we've gone through. So we're overbought. We're through the 65 level. The last signal is this blue candle, blue dot, so we're not taking any sells yet. Get the sell there, take it, trade it down, and it goes straight through the red 50 level down here somewhere. Close half, trail a stop. Now let's look. Now the problem trading the daily chart, if you're using this method from the 35 to the 65 levels, you're going to be a long time between trades. Look, there's one there, that was on the 3rd of March 2019. Next one's not until same year, but July. So it's a long time between trades. But if you're trading 28 pairs plus metals, maybe crypto, maybe a couple of exotics, you'll get enough trades. It's a safe way to trade. So we'll go to the next one. This is buy here. See, price comes below the 35, buy, up through the 50, close half, trail your stop, can't lose. Let's go to the next one. Now we're into COVID time here. So here we go, comes down nicely below the 35 level. There's a buy signal, take that, crosses the 50 on this big candle here, stop and plays, trail it up. Now we're in COVID now, we've got a sell signal because we're above, take the sell, there's no stops in place so you don't have a stop, take the sell, take it down to the 50 which is down here, the 50 level, trail the stop, bingo. Let's just go through, there's a sell there, down to 50 level, no problems. Here we go, next one's a buy, so buy, second buy, up through the 50 level, close, trail, close partial, trail, off you go. Next one's a buy, so there's your buy 1, second buy there, comes up in here anywhere, we're through the 50 level, made money on that, made a little bit money on that, no dramas at all. Let's go, here we go, here's where we're getting a little bit of trouble. Let's see how it goes. So first buy, so it comes down below 35 level, first buy, second buy, third buy, fourth buy, we're getting so 1, 3, 5, 8, 13, and I guarantee you it's through the 50 level there, and that is a winner, overall winner. I can guarantee just by looking at that, even though that trade will be a loss, that's only for one lot, that one's for 3 lots, but this one here is a winner for 5 lots, it'll be a small winner. This one's definitely a winner for 8 lots, and this one here is for 13 lots, so that'll more than be enough to cover all those trades. Just keep on going. There's a buy here, second buy there, and we're up through the 50 level up here. So there's your buy. Just trail the stop. All right, here we go. Here's one that's going to give us a bit of grief. We've got one sell. We're above the 65 level. One sell. Second sell. Comes down. Now, here's an example of what this is what I do also. Now, if I was in this sequence here, sell, sell, and we're still not near the 50 level, I'm still watching my MACD platinum, because here, see that low there, I'll draw it up for you. So there's your low there, like that, like that. Hidden bullish divergence on the MACD platinum. Now I'm taking this buy trade every day of the week. I'm not too concerned. I'm going to, I can guarantee you just here somewhere, if you wanted to, you could probably, if you had enough profit there, you could probably get out of that, because I know there's hidden bullish divergence will be good, and I can see it obviously. But it doesn't matter. You can stay in the sells because it still hasn't played out to the 50 level. But here I'd be taking this for sure, and I'd go into DCA mode here because I take a buy there and it's gone up. Got a sell, I'd ignore that, and a second buy there and take the buy, and you would have made money there. But that's just a little side example of what you're looking at. That's why I have the. That's why I also have the MACD Platinum on. I'll explain it in a minute, but we'll get to it. Right, let's go. We've got a sell there, second sell, and a third sell there, and we're down through the zero level in there. I can guarantee those three trades will be out for a winner. Let's keep on going. Nothing, see, there's a long time between, very close there. And you can look at other things too. You can look at the MACD Platinum and take trades. But we're looking for, just for the overbought, oversold. Here's a sell there, nicely down, can't lose on that. Just leave your stop, trail it, you can probably make a bit there. Here's another one, sell. So one sell, second sell, third sell. So 1, 3, 5, down through, can't lose. Here's the last one, sell. And there's another hidden divergence on the buy side, take that one for sure. Would have made a few dollars. In the meantime, in the sell, take the second sell, down here somewhere, you're definitely out of those trades for a win. So that's it for the basic model. So hang on a sec, I'll pause the video and I'll set up for another one. All right, I've just brought up, I've changed pairs and I've changed time frames. So I'm on the New Zealand Swiss franc 8-hour chart. Now let's just pick a random spot in the chart. I'll just go blindly back here somewhere so we can have a look. All right, there's a good place. I can see a couple of trends coming. Now it's the same setup. We're just looking at a slightly different way of trading it. Instead of being worried about the overbought, oversold, we'll just trade from either side of the 50 level. So here you can see prices above the 50 level. Well, the QQE is above the 50 level, and we get a sell signal there. Take the sell signal, and if it breaks the 50 level, same deal, just start closing out half and trailing the stop or something like that. Here we're below the 50 level, so we're looking for buys. There's your buy, through the 50 level, close. Here's a sell, above the 50 level, take it. As soon as we're through the 50 level, start closing half, trail the stop down, and hopefully catch this big move down. Now this is where it gets a little bit messy. So in this case, we're oversold anyway. So it's well below the 50 level, it's even well below the 35 level. So it's a buy, second buy, third buy through the 50 level, and that's a winner. In the meantime, you could be taking some of these trades here. There's hidden bearish divergence there, from there to there, there to there. Take that second one and down through there. So you're always looking for ways to hedge if you're getting in trouble using the MACD Platinum. Let's have a look here. So we've done that one. So now we're below the 50 level, so we're in buy mode. So buy, buy, buy through the 50 level, we're out. Here's a sell, so sell, and that too is above the 65 level. We're not worried about that too much. So sell, second sell, and we're out for a profit. And you can trail that all the way down there. We're in buy mode, buy, 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 another buy, another buy, and off to the races. Up there we go. So we're in sell mode. So that's over the 65. Just take that down through the 50 level. We're all good. All right, here we go. Here's a buy. It's getting a little bit tricky. We've got a buy. We're just below the 50 level. Second buy there. Third buy there. And up through the 50 level. And look at that. So we're in sell mode. Sell. Second sell. Down through the 50. Good as gold. Buy. Yeah, just below the 50. Take it. Good. Sell 1. Sell 2. And in here we're out for profit. Buy. Probably wouldn't have got a profit there. You might have got out break even something. Sell not valid. Buy not valid. Here we go. This is where it gets a little bit messy. We'll have a crack at it. Sell above the 50 level. 1, 3, 5, 8. 13 and down through there, and I guarantee that's a profit. So 13 was your last trade, so 1, 3, 5, 8, 13, and you through the, see where you're through the 50 level, anywhere in these candles here. So those last 3 trades, which are bigger than the first 2 trades, are all profitable. I've got to buy through the 50, no problems. Sell down through the 50, all good. All right, here's another one. Settle that back a little bit easy. We've got a buy, second buy. We're getting very close to the 50 level with no cigar. And if you think you're in a downtrend, something like this, and with the MA20s going down like that, you may get a little bit concerned. You don't want to get too many trades on. If you get a break-even level, especially with the MACD platinum above the 0 level, if a break-even level presents and you want to just reduce your risk, just get out. Doesn't matter. These trades on the 8-hour charts come up plenty. So if you didn't, there's your buy 1, buy 2, buy 3, buy 4, and I can guarantee you're going to be close to getting out at least worst case scenario, break even. Remember, that's for 8, that's for 5, that one's for 3, that's for 2. So in the meantime, you'd be taking these sell trades. There's hidden bearish divergence there on the MACD platinum, so I'll be taking that every day of the week and DCAing that. So there'll be a sell there and a sell there, and going looking through the MACD platinum. There's a big drop here, so let's have a look. That's a sell. Just trail that all the way down. Now we're getting the buy mode again. So buy 1, 3, 5, 8, 13. I don't know if we would have got out there, but would have taken another one there at 13, another one there at 13. You stay in until you get out. And I probably guarantee in there somewhere you'd be out for profit, overall profit. Well and truly before that. So in the meantime, we're in sell mode. And you can do multiple sequences. So you take a sell there, and a sell there, and I'm pretty sure we didn't go through the 50 there. We definitely go through it there. So even that sell sequence would be a winner. Buy, probably take that out for a break-even trade. Sell, not valid because you're already below the 50 level. Buy is probably on the 50 level. All right, sell, second sell, 50, no problems. Buy, yeah, break-even to the trade. Sell, no problems. Buy, no problems. All right, we're back in sell mode. Sell 1, sell 2, and definitely a winner there. Buy, here we go, here's the one. Buy, yes, definitely out, no problems, or not a loss anyway. Sell, not valid. Buy, no problems. Sell 1, sell, probably out in that one I'd say, doesn't matter. Sell there, probably out break even. Buy not valid, sell, take it, yeah, that's a winner. Right, here we go, there's a problem one. Buy, second buy, third buy. Probably take that, fourth buy. Yeah, that's no problems. Even if you took this, you know, if you want to hedge it, take that sell there. You take that one, I'd take that one as a hedge, and that would have given you some money. You could probably take that one, and you probably have to take the second one there too. So you can see just by going from one side of the 50 to the other and taking the buys and sells and just aiming for that 50 level. And it doesn't matter if you get out at break even or overall break even on a trade, you know. On the 8-hour charts, there's plenty of trades, plenty. If you drop down the lower time frames, some of these, you know, where you see these sort of big moves, like something like this. Now that's a big down move on the 8-hour chart. It's going to look twice as bad on the 4-hour chart. So the trade-off is you'll get more trades, but you'll be in drawdown longer. So when it comes to drawdown, that means margins tighter. If margins tighter, that means swap fees could be possibly involved also. But it's mainly a margin, especially on a lower leverage account. Margin basically means it's the deposit you put down for every trade you take. So the higher leverage, the less deposits required. So it gives you more buying and more selling power. All right, I'll just pause the video and I'll come back and we'll have a look at something slightly different. Okay, now I've just switched over to a stock. So Costco, I think it is Costco. US stock, big American stock. What's it valued on this chart? This is back in 2018. It was around about $250 a share. So it's a share. Now with stocks, and I'll look at ETFs, you tend to have a bullish bias, which means I'm more inclined to buy than I am to sell. So what you can do, and this is a little bit different, and this is probably good for a long-term investment type strategy, or if you can check the charts every day. It's something you'd probably do in a weekly setup, but I'll just look at the daily chart. Now the difference is I basically use the same setup. The only difference is I get rid of I don't really need the bottom line. Delete, all right? So I'll just delete that. So because it's a share or a US stock, and this could apply to any share in any country, whether it be the Nikkei or the ASX in Australia or whatever, doesn't matter. You can do this with anything. The only problem with stocks is they tend to gap at times. You can see a lot of gaps in the chart, so that's something you have to be aware of. But let's have a look at this and see what I'm talking about. Now, with this, I'd be avoiding the sells, but we'll have a look at some anyway, just to prove that you can. I've never bought stocks on MT4, so I'm not sure how you buy them. I don't know how you buy them. Let's have a look, trading. Yeah, there is lots, so it must be a CFD, yeah. I'm not sure how it works, but doesn't matter. But just say you're on Interactive Brokers or something like that. If you're going to buy, say, 100 shares, the next position size would be 300, next position size would be 500. So you'd have to be aware of how much you've got in your account, how much leverage you got, how much risk you want to take, etc. But with stocks, like I said, I've got a bullish buy. So anytime the QQE comes below the 50, looking to take a buy. So in this case, here's your buy here, below the 50. There's a sell, ignore it. Second buy there, so you load up with more. As soon as we're through the 50 level, start reducing your size and putting the stop in place. Very similar to the Forex. So we're ignoring the sells. Again, here's another buy here. We're just through the 50 level there, so you're probably out. That's probably a break-even trade. But it's no big deal. If you weren't out, just take another buy down here. And you're out on this one up there. And if this was a bigger position size, you'd probably cover that. If not, just wait. There's another buy there and take it. So now this is where, remember I said we don't sell? And this is probably why. See, we're above the 65 level. This is a share stock. We call them shares in Australia, but I know Americans call them stocks. So there's your sell, second sell, and your third sell, and you're probably just going to break even. So it's not worth the hassle. I'd rather take the buy, and that's There's your buy there. It might not be valid because you might be above the 50 level. Then you look for if there's anything else, potential divergence. In this case, there's probably hidden bullish divergence, so you probably take it anyway based on the MACD platinum. So let's have a look. So again, we've gone above and it's worked out. Sell, second sell, through the 50 level down here. Yeah, it's going to be touch and go. It's not worth the hassle. And there's a good hidden bullish divergence. See there, to there. Same on stocks. Take that buy and just take it through the MACD platinum, keeping that. Now, if you just left your stop down here somewhere, you'd probably make a killing. All right, here's one. Here's a buy below, just below the 50 level. Through the 50 level, trail it up. Here we go again. Buy up through the 50 level. Can't lose. Sell. You probably come out a win on that one if you wanted to. This is COVID. Have a look at that. So where's your buys? There's one. It's not really much happening in there. You're getting a bit nervous. Through the 50 level here, there's your buy in there. You couldn't lose on anyway, so that's a good thing. Let's have a look for another one. Buy, possibly in there. Here's a good one, right below. So you basically buying retracements. Buy there, through the 50 level, trail it up. Yeah, you probably can't get in there, but let's have a look. Yeah, hidden bullish divergence, clear as day. Take that buy on the MACD platinum, take it up through there, trail it up. Let's have a look. Here we go. This is here's a good example. Well, that one's a winner because that goes up through the 50, all good there. Drops back down, first buy there. Then we have a bit of a drop off the cliff. No stop in place like usual. You'd be getting a bit nervous. Then buy there, bigger position size. So if you bought 100 shares there, buy 300 shares there. If you bought 20 shares there, buy 60 shares there. We're through the 50 level up here somewhere. Just let it cruise. Close some. You probably couldn't close that. Wouldn't be worth it. Close some of these. Leave that one on. All right, let's have a look. So you don't want to be taking the sells. All right, there's your buy signal. Buy might not even be valid, but again, look for divergence. There's plenty of hidden bullish divergence there. Take that buy on the MACD platinum. Probably take that one, then take that second one, and off you go. All right, here we go. Buy. No problem through the 50 level. Can't get on that. That's no divergence either. Here's one here, nice easy one. Buy. Second buy. Up through the 50 level, all good. First buy, didn't quite get through the 50. Second buy. Now, here's a good example where prices kept on going down. Trend line across the highs there. Wait for a break, take a third buy if you want. Doesn't matter, it would have worked out anyway on the second buy, but I'd take a third buy and off you go. All right, here we go. Buy on the gap. Would have been a bit messy in there because you got that big gap there. It's a bit of a pain. Doesn't matter. You can probably just sit on it and wait. Remember, it's a stock market. It's got a bullish bias. And if it did go against you, you can just say you got this red dot here, which we did. Just sit tight and wait for another blue dot, but you didn't have to because it went straight against the red dot and straight up. So buy there, up through the 50, can't lose. What have we got here? Nothing. Touch and go. Yeah, they would have got in there. Buy, just trail it up. Buy, no problems. Buy, no problems. What have we got here? Nope. But again, that's a hidden bullish divergence. So you take that one on the MACD platinum, take that one. In the meantime, we're going on below the 50. So we're taking that anyway. Taking another one there. And we're through the 50. Yeah, we'll just trail that up. Remember what I said we started about 230 something? What is it now? 926. You could still be in some of these trades. Buy. Can't lose. Buy wouldn't be touch and go, but No divergence there. Buy there, no problems. Buy, there's a good one, nice, straight up. And last, we're getting near the end here, buy, yeah, no problems, no losers, over, what's that, from 2018 to 2025, no real drama. All right, let's go, I'll just pause the video and I'll find an ETF. All right, let's get back in it, let's look for an ETF, what's that one? I'll just pick, I got no idea, because I don't really trade ETFs, I'm looking at them, but XBI, let's have a look what XBI is. This could be very random. Yeah, and I'll get this set up, XBI, standby. All right, that was a bit of a bummer. Problem with MT4 with ETFs, hasn't got enough data. So I've gone over to TradingView, and I've just had a look through my list of ETFs here. Let's pick one here. Vanguard Growth ETF, all right? I don't know. Vanguard Growth, no idea. So let's just go back in time a bit and we'll just have a quick look at this. It's basically the same setup, just slightly different colours. Make sure I'm on the daily chart. Yeah, all right, let's have a look. I got no idea what this ETF is. I don't know how to trade ETFs. I haven't done it for years. So let's go back to, no. Oh, there's, all right, so same deal. It's the same setup, just like, as I said, slightly different colours. So in this case, it's the 50 levels marked by the yellow line. It's slightly different colours, don't get it wrong. So we're going to buy here. Remember, we're only buying here. I'm not sure. It's not an inverse ETF or anything like that. So it's just it's with the market. So an ETFs normally represent one stock or a basket of stocks or something like that. Exchange traded funds or something like that. So there's a buy there, second buy there, and through the 50, no dramas. Let's have another look here. Buy, probably through the 50, no, not through the 50, through the 50 there, no problems. Buy below the 50 and through the 50. It's a bit slower, isn't it? All right, we're coming up to COVID, so we're below the 50. There's, is that COVID? Yeah, March 20. Buy, second buy, and off she goes. No problems at all. Let's just look for the buys, eh? Here's a buy in here, buy. All right, here's an example. I probably should have showed you first up. See the buy dots already there, the QMP filter dots on this candle here. And if you look down at the QQE, it's not through the zero level yet. So that buy, the current signal's a buy. As soon as price goes through the 50 level, because I've got a blue buy, I just take a buy. I don't need to wait for anything else. So it's confirmed through the 50, which will be on the close of probably that candle. Not that one. Close of that candle. So on the open of this candle, would you believe you're taking a buy, which is perfect. In this case, it's perfect. And it goes up, it goes through the 50 level, we'll close out. So it's just something you've got to be aware of if you're going to trade like this. Here's another buy here through the 50 level, no dramas. Let's bring it on. We're just looking for buys. Buy, second buy. No, not through the 50 level, through the 50 level up there, just trail it up. Here's a buy, no dramas. They're just buying pullbacks basically. No setups there, but there's no setups in here, but hopefully you're still in the buy, you're just trailing it below the recent lows. You'll get an idea where it's going because once it starts coming back to the 50 level, you should be getting out anyway. So we're looking at buy again, so there's a buy there, one, second buy, through the 50 level, life's good. Right, what have we got here? Buy, one. Now we're through the 50 level, so that's probably a scratch trade or a break even. If not, you'd be out here somewhere, plenty of opportunity to get out. Buy, one buy, two buy, three buy, through the 50 level, and life's good. That's not valid, so it's not a buy. Buy through the 50. Okay. Buy and through the 50. All right. Here we go. 1 buy. 2 buy. 3 buy. Then up through the 50 in here. That one's not. Next one is. No, it's not. That one isn't. But that one is. Yes. So there's your 50. Close out. Buy, no problems. It's a good one. 1 buy, 2 buy, up through the 50. Trail it. Here we go. Buy, out. Buy, no problems. Another one here. Buy, no problems. Again, you can do the same with the MACD Platinum. Look for double tops, double bottoms, especially double bottoms. Don't worry about trading to the downside. So if you're in this buy here, like your entry was there. If you look right, there's nothing. Even if you put if your stop loss was a break even, you can just leave it there. If you accumulate, that's just keeps on going up and up. All right, here's more buys in here. So buy again up there through that. Here we go again. 1 buy, 2nd buy, no problems. Another pullback here. Buy, no problems. Again, there's your entry there. Look right, nothing till over here. In the meantime, you're back in more trades. So what are we in trades here? No, that's not valid. So that one there is valid. And it's a bit ugly, but not a loser. And here's your most recent buy, 2nd buy. This is during the tariff little war, volatility, and up we go. It's still going up. So that's it. You get the idea. And I could pick any random on that watch list there, and they're probably the same results. And if you do have a loser, they'll be far and few between. And in the meantime, you should be making money on other pairs. Now, you'd probably, if you're going to trade stocks, if you're just buying stocks like dollar for dollar, 1-to-1 leverage, you got a big account balance. But if you're doing ETFs or trading on margin, or I'm not even sure, like through MT5, I'm not sure if the spreads are comparable or what the costs involved and stuff like that. But if you've got say a retirement portfolio and you want to trade it yourself, this is a perfect way to do it. And like I said, you could go down to the weekly charts and do the same thing. Now let's have a quick look at the weekly chart. Look, you're going to be far and few between trades, but this is the same instrument. I just went to the weekly. So there's your buy, 2nd buy, 3rd buy, and you're up through the 50 there, and you would have been made plenty of money. So yeah, just stick to the buy side when it comes to shares and stocks and ETFs, even Bitcoin. You can look at gold, all buy side stuff. But with gold and probably Bitcoin, you could probably look at a bit of short, especially just reduce your position size if you're going to do shorts, because you'll make more money on the long side with most of them. All right, boys and girls, I've probably rabbited on long enough. If you hit the like button, what I say that every week. If you like the video, hit the like button and subscribe button. And look, this is just one of many ways to do different ways of dollar cost averaging. I'm just showing you a few different ideas, and that's what I try to do. Take these ideas and run with them, or try them yourself. But like I said, they're high risk type trades. And I do call them on a daily basis in my daily update. Well, I've got some brief details on what pairs I'm doing the DCA on. But I've got a shared spreadsheet. You can have a look at that and it'll explain it all to you. Right, it's a long video, only 40 minutes. Way too long. All right, thanks for watching. Enjoy the rest of your night. Cheers.